I'm going to talk you through my trading journey. I'm going to explain how I started, why I started, how I learned how to trade, and all the bumps and bruises I've had along the way, how my strategies developed in that time, and how my trading has developed in that time, and how I got from where I started to where I am now. I always get asked so many questions on all different types of social media about my trading journey. So I wanted to answer as many questions as possible. So the questions that I'm going to be answering in this video are: what inspired me to start trading? What was my biggest challenge when I first started trading? How did I develop my trading strategy? What key lessons have I learned from my trading mistakes? How do I manage risk in my trading? What resources do I recommend for beginners? So what books, YouTube videos, that sort of thing. How do I stay disciplined during market fluctuations? What indicators or tools do I find the most useful? How do I decide when to enter or exit a trade? Can I share any tips or tricks for maintaining a trading journal? How I handle emotional stress whilst trading? What are some of the common misconceptions about trading? How much time do I typically spend analyzing the markets? What markets or assets do I focus on and why? And how do I keep up to date with market news and trends? So some really good questions. Some are quite difficult to answer. If you're excited to hear about my trading journey, then make sure you hit the thumbs up button now. It's good for the YouTube algorithm. It means I can continue to create this free content for you. I know I have done videos before on my trading journey, but I've actually recently deleted all of my past videos. And the reason for that is I started this channel around 4 years ago. So I was a completely different type of trader then, as you'll discover in this video. And obviously I've evolved quite a lot in the last 4 years. The quality of my videos in terms of just the filming, the editing, all of that wasn't as great back then. And I thought that this would just be a really good point to start afresh so that you knew that all videos from this point on were from a certain experience level and were also consistent with the strategy and the style that I trade at the moment. And I know in my last video, I also mentioned that I recently got the DIP qualification. So I wanted to quickly talk about that before I go and answer my questions and go into my trading journey. I've been asked a lot of questions about this. I've been asked if this means that I am now a financial advisor. Am I offering financial advice? And the answer is no. A DIPFA is just the minimum level of qualification that I need to go on to work as a financial advisor. But I haven't started working as one yet because I only got this in June 2024, at the end of June, and it's only September now. So it's only been a couple months. It just means that I am able to go on if I want to. The reason why I wanted to get this is because I wanted to help traders with other areas. Trading is very high risk, and a lot of the people were coming to me with a lot of questions, and most of them weren't actually suitable for trading because the high risk element of trading wasn't actually suitable for them. And I wanted to be able to help people in more areas. So that inspired me to take the qualification because I just thought it was the right thing to do to get qualified to a certain level if I was going to be giving guidance on different areas of finance. And if I was going to be having a YouTube channel about a high risk form of investing like trading, then I ought to have at least a certain level of qualification. However, nothing in my videos, nothing in this video or any of my other videos should ever be taken as financial advice. It should never, ever be taken as me telling you when to buy or to sell, because in order to give financial advice, it's got to be really one-on-one. It's got to be recommended for a certain person after doing a detailed fact find on their specific risk appetite and their specific situations and giving them a recommendation that's specific for them. So I just wanted to make it clear that even though I have taken this qualification, nothing in my videos will ever be financial advice. It will always just be generic guidance and is for educational and informational purposes only. So if you are new to this channel, my name's Caroline. I am the founder of Trading Angel. I am a day trader and a trading coach. I trade the US 30 and the NASDAQ and the New York session. I started my journey as a Forex trader back in 2015 was when I first started learning how to trade. And before then, I was working as a journalist. I'm going to go through the questions now. I'm going to answer them and we'll take a deep dive into my journey and how I've got to where I am now. So the first question is, what inspired me to start trading? So that's quite a nice one because it starts at the very beginning. So as I said, I was a journalist before. I actually still do some work as a freelance journalist now. So I really enjoy that, but it wasn't paying me as much as I was hoping. So in 2014, so the year before I started reading up about trading, I moved to Brighton, which is a seaside town in the UK, and I moved there to study to get a qualification called an NCTJ, which is a journalism qualification. And I felt at the time that I spent quite a lot on studying, and then I took some time off from working to study. And then when I passed, I wasn't making money straight away because I was having to intern. So I was then having to put a lot of just day-to-day expenses on credit cards. So I was buying food on credit cards and just things that I needed in order to stay alive. And then when I started making money as a journalist, I was only making something like £45 a day at the beginning. So it was hardly anything at all. And then it wasn't enough to pay back the money that I'd spent trying to get the qualification. So I wanted to carry on working as a journalist, but I also thought maybe I ought to learn about finance or maybe have a hobby or an interest or something in something that would make me more money, pretty much. And I landed on trading. I knew a few people who'd worked as traders and had some success or had worked in that industry. I had a friend at the time who was a Forex broker. So I thought, okay, Forex, let's start with that. So I just started reading about it and trying to educate myself and trying to learn a little bit more to find a way to make myself make more money. Next question, what's your biggest challenge when you first started trading? This is quite a difficult one to answer because there's been a lot of challenges along the way. Trading is not easy. And I suppose every stage of the journey presented a new challenge. So probably if I was thinking of my biggest challenge, I think actually my biggest challenge was probably starting in the first place. So just taking that leap and learning something new. When I first started learning how to trade, I was reading about technical analysis. So I was under the impression that I was able to choose whether I wanted to be a technical trader or a fundamental trader or what kind of trader. So I just kind of went with technical analysis. I thought it sounded fun to analyze the charts. And I don't know, I just picked technical analysis because I thought I might get on better with it than fundamentals. I think that was quite challenging, not because I mean, it was quite fun in a way. It was quite interesting to learn something new. But I think what was challenging about it is there was a lot of language that I was having to learn, which I hadn't learned before. I was having to read up about a lot of things that was completely alien to me at the time. And I've never done anything high risk before. So I've never done any kind of high risk investment. With trading, you can obviously lose 100% of what you put into it, and you can lose it quite quickly because of the leverage. So I'd never done anything like that before. And because I didn't have much money to start with, the idea of losing even a little bit felt quite scary to me. So I think taking that first step was very challenging. It's not that technical analysis is very difficult to learn, it's just that when I was learning it, it was completely alien to me. I think what was also quite difficult, just emotionally, is when I realized that technical analysis wasn't enough. And I realized I was going to have to learn fundamentals. I know there's going to be traders who are going to argue with me there and say that technical analysis is enough and they're technical traders and they're millionaires or whatever from it. But for me, technical analysis wasn't enough. I was doing well for, I'd do well for like 3 months just using technicals, and then I would lose all of that in 1 month because a news event would come out and I didn't understand it, or my strategy would have to change when news releases would come out and I didn't really understand how to manage both of them. So for me, technical analysis wasn't enough, and it was a bit of a game changer when I started learning about fundamentals as well. But that was also a bit of a challenge as well because I thought that I'd done all of the work. So I thought that learning technical analysis and getting a strategy, having a trading plan, I thought all of that, I thought I'd done all of it. I thought I'd done all of the work and I was ready to move forward with it. And then I had to discover that there was this whole other mountain to climb. So it'd be like getting to the end of your first ever marathon and then finding out you've got 26 more miles to run after that. So that felt like a big thing. Funnily enough, though, when I started learning fundamentals, it wasn't actually as difficult as it was when I first started learning technicals, because by that point I was already live trading, so I already understood a lot of it. I thought it was going to be more difficult than it was. Next question, how did you develop your trading strategy? My strategy has changed quite a lot over the years. In fact, it's changed completely. It's changed several times. And that's a part of the reason why I wanted to start fresh on this as well, because I didn't want it to be confusing having lots of different strategies and indicators and different things all on one channel. I wanted to keep it clean. So over the years, I mean, I started trading Forex. I now trade the indices, the American indices. I started trading on the day chart, and that's because I was working full time, and I thought that if I was trading the day chart, I only had to take a reading in the evening once the day chart had closed. So that kind of worked for me for that. I then moved on to the 4-hour chart, and then I moved on to, I'm now trading the 1-minute chart. So that's changed quite a lot. The time frame that I'm trading on's changed quite a lot. Obviously the markets, I've said I was trading Forex. I moved on to commodities for a bit, and now I'm on indices. So that's changed. The fact that I was just a technical trader, and now my strategy is a mix of technicals and fundamentals. So that's changed quite a lot. I used to have 3 strategies that I would trade that I was looking for setups on. I've now changed those completely. So I trade 2 and they're completely different to those 3. I realized maybe I've read that wrong. So that said, how did you develop your strategy? So I've just answered what has changed in my strategy rather than how. So I guess those are the things, those are the what's changed. How I changed them, I guess they just naturally evolved over time after I have been trading for a while. They just naturally developed to be more in line with my personality type and what works for me. Trading's very personal, so what works for me isn't necessarily going to work for someone else. The New York session and the American indices work really well for me because I feel like I'm an afternoon person more than a morning person. So I just like trading the New York session more than I liked getting up early and trading London. I know it's not that early, but still I would still have to get up quite early, especially if there was news out or I needed to get other things done before I started trading, because obviously you want to wake up, have coffee, do your prep and everything before London even opens. So it was just nice to be able to have a bit of a lie-in. So the time of day that I'm trading has changed. I think the how is pretty much, it's just naturally evolved over time to fit my personality more. What I like about the indices and trading on the 1-minute chart is you get instant feedback as well. So it's quite quick and you know straight away if you're in a bad trade. You don't have to be holding trades for hours and hours and waiting for it to take profit, or not knowing if you're in a good position or not. You do get almost instant feedback, which is quite nice. What key lessons have you learned from your trading mistakes? That's a really good question. I learned every lesson from my mistakes. My mistakes have taught me every lesson. I was self-taught for a long time, so I didn't actually get any help for a long time. So for a long time, I was literally just learning off trial and error and from my own mistakes. Key lessons that I learned were, I mean, I would say the biggest mistake that I was making for a long time was I was keeping my stop loss too wide. A lot of that was to do with pride, because I didn't want to admit that I was wrong. I didn't want to have on my profit and loss, I didn't like seeing the losses on there. I thought that if I just kept my stop loss really wide and I only closed trade and profit, then my profit and loss would always look green. So sometimes I would hold trades for a really long time and they would be at a loss, and that's because I just didn't want to accept that I'd got it wrong. Which is obviously terrible trading, and I don't recommend that. But I learned about keeping stops small, keeping them tighter, being okay to take losses, and that actually it's a lot better to take a small loss than it is to take a giant loss. And it's okay to be wrong in trading because no one is right all of the time. There's a really excellent book called The Best Loser Wins. I think one of the questions later on is actually on trading books and resources, so I will go on to that a bit later. But there is a really good book on that. And, learning to get okay with taking small losses is really crucial to winning overall. That was one of the biggest things that I learned, was to keep my losses smaller, to be okay with taking the losses. Another thing was overtrading. I used to overtrade a lot, and I think a lot of traders struggle with this. You kind of slip into this thing where you're determined to get something out of the market, and actually what that can do is more harm than good. Every time you open a trade, you're actually opening up more risk. So the more trades you place, the more risk you've opened up. So actually trying to scale that back and have a minimum amount of trades that you place each day is better overall. And that was quite a hard lesson that I learned from overtrading. How do you manage your risk in trading? So I would say I manage my risk. Obviously, a stop loss is non-negotiable. I put a stop loss in before I place the trade, and I know what it's going to be before I place the trade. So stop loss is non-negotiable. Keeping it tight is non-negotiable. Um, Having a good risk to reward, I don't obsess over it. I mean, this one here on NASDAQ, I keep it at about 1 to 4. It's a little bit less on the US 30, as in it's slightly less than 1 to 4, but obviously it's still in my favor. The risk is obviously a lot smaller than the reward, and that's a big thing. Another thing is I actually don't use big lot sizes. I know a lot of traders risk around 1% in their trades, and I actually keep it more like this one. Actually, this was only risking 0.1%. So the reward was 0.4%. And I know a lot of traders will risk 1%, so their reward would be 4%. So that's a little bit more aggressive. Mine's a little bit more chilled. A little secret about me is that I hate trading size. So I get really nervous whenever I increase my lot size. I feel a lot more comfortable with smaller lot sizes, which is why I don't take on so much risk per trade. And I know that doesn't really align with what a lot of people perhaps believe trading is like. I think a lot of people think that once you've got a strategy and it works, that you can recreate it on a huge lot size, on a huge account. But actually, I find that every time I increase my lot size, it throws me a little bit, and I always go through a bit of a losing streak, even though my strategy is exactly the same. So yeah, that's a little secret about me, is that I do like to keep my lot sizes quite small. And for me, it feels like a really big thing when I do increase them. I hate doing it. So yeah, that's one way that I keep my risk small, is that I only increase my lot size very gradually. What resources, books, courses, websites do I recommend for beginners? I think it's quite a difficult one because things have changed a lot since I first started. And I don't necessarily recommend what I did when I first started. I can tell you what I did, how I learned, and then what I would have done differently. So I read obviously a lot of Forex books because I started on Forex. So I read a book called Forex for Beginners by Anna Cooling, and I thought that was a very good beginner friendly book. Obviously, I wouldn't recommend that necessarily if you're interested in trading the markets that I trade now, which is US 30, NASDAQ, because it's specifically for Forex, although it's not going to do you any harm and it's got a lot of information that crosses over. It might not necessarily be the best one for that. Also, controversially, there's a book called Market Wizards, which you can see behind there, which I have. It's most traders' favorite book, but actually it's not mine. I've read it a couple times, and I think it's obviously good practice to read up about the people in the industry that you work, and to read up about the best of the best in the industry that you work. So, it's definitely interesting reading. I just felt like you couldn't use that information to help you trade today. A lot of it's outdated. So a lot of it's, I want to say like 20, 30 plus years ago. People, traders from a long time ago, trading different instruments in a different time as well. And it was a completely different style of trading. The one really interesting thing about that book is you'll notice that every single last one of them really struggled in their first year or two, had lots of losses, did not feel like they were natural at it, and really had to overcome a lot of obstacles. They usually had a catastrophic story of their first trade or their first trading experience. So I think from that perspective, it's quite cool to understand that it doesn't really come naturally for anyone. You do have to put in a lot of work to get there. So it's kind of interesting from that point of view, but I don't think in terms of actually helping you to trade, it's that useful or it's the best one. Trading books which I really enjoyed when I first started was Trading for a Living by Dr. Alexander Elder. I also like Trading in the Zone by Mark Douglas. I think you get more out of those books if you reread them. So every couple of years, I will reread the books that I read when I first started, and I get different things out of them now at the experience level that I am at than I did back then. And I think that's just natural because certain things didn't make sense back then and they do now. I can't really remember. I used to watch a lot of YouTube videos, and I learned a lot from YouTube videos. I don't know if I would recommend the ones that I watched to beginners now. And it really depends what markets you trade. I did watch a lot of can't remember his name. I want to say, is it Rainer Teo? I watched a lot of his videos at the beginning. I think that they're quite good for the basics. Oh, I also did a course called Baby Pips. And I don't know if it's still going, but it's a free course online and it'll teach you all of the basics. It's not going to make you an excellent trader, but obviously before you get to that point, you have to learn all of the basics. So expecting to be an excellent trader from going through the Baby Pips course is like expecting to write like Shakespeare after learning the alphabet. It's like, it doesn't mean you're going to be an excellent writer just because you've learned the alphabet, but you have to learn the alphabet before you become an excellent writer. So it's that sort of thing. I think it's good for the very basics, but it is very basic. Now, these days, I actually really enjoy listening to trading podcasts. I think they're quite nice to listen to the journeys of other experienced traders. So there's a YouTube channel called Words of Wisdom, and I really enjoy watching that. So that's probably what I would recommend to beginners now. How do you stay disciplined during market fluctuations? This doesn't actually specify if the fluctuations are short-term or long-term, but I'm going to show you an example on the US 30 because it's quite a nice example on the day chart. You can see that when the market conditions change, sorry, I do have a lot of lines on here. I'll explain what all of these are later. But can you see how on the day chart, you can see that the market it goes through its different phases. So for example, this period here, do you see this was October 2023 to about April. You've got this really nice uptrend. You also have these periods here. Do you see this period here where it's sort of going sideways? That's actually about a month overall where it went sideways after 2 months of going up quite steeply. This is what I'm interpreting this question to mean, but if whoever sent it thinks I'm not answering it correctly, feel free to ask in the comments below what you did mean. But what I'm interpreting it to mean is different market fluctuations. So when it's sometimes trending or when it's sometimes consolidating, I find it really helpful to go to the day chart and look at the big picture because sometimes you can't always see that on the 1 minute chart. If you're trading your strategy, which works really well in a trending market, you might find that it doesn't necessarily work so well when the market's going sideways. Because can you see here, these candles, I'm just going to measure it quickly, but I mean, I want to say like 600 pips or so. Yeah, that one's like nearly 600 pips. You see 527 pips in 1 day candle just going up. That's the sort of thing we're looking at here. Then we go sideways here. I'm just going to measure one of these ones. So that's about 400. And you can see that it's pretty much just going sideways. So how you trade in this area here is going to be completely different to how you trade here. And looking at the day chart and getting a clear idea of what the market's doing long term can be quite helpful for dealing with that. That's how I've interpreted that question to mean. But as I said, if it meant something else, please let me know. What indicators or tools do you find most useful? Okay, so I've got loads up here. They're up here, so I've favorited a lot here. I use mainly just the lines. So these ones here, I'll talk you through them. The vertical line here, I use this to mark up. I'm going to go to the 1 minute chart quickly just so you can see. I use this one to mark up the different days. So whilst I'm trading the New York session, I'm trading from 5 a.m. UK time to 5 a.m. the next day. So this is the 24 hours that's actually midnight to midnight in New York, because New York's 5 hours behind. So I use these to mark up the day, so I can see the day exactly as it is the New York day. I can then mark up the high and the low of the day. I don't have the low on there yet, but for example, I can move that there. So that's the high and the low of the previous day. So I use the horizontal line tool to draw up those. I use this as well. I use the alarm tool as well if I want to know when it's crossed over that. I use that's the long position tool and the short position tool. I use these all of the time in my trading. I use those every day. I use the rectangle tool to draw on these boxes, which marks up my zones of interest. I do have the Fibonacci retracement on here, but to be honest, I don't use it as much anymore. You saw me earlier using the measure tool. I use that a lot. And I also sometimes use the ATR. How do you decide when to enter and exit a trade? So I know exactly what my entry and exits are. What I do is before the market opens, I do my pre-market checklist, which helps me to establish my directional bias. So that's all my prep that I do beforehand, where I check the economic calendar, the earnings, and I put on my points of interest, I do all of my analysis, and then I also draw my zone of interest, and then I'm looking for a really specific move in and out of that zone. That's strategy 1. I have strategy 2. They both have more fun names, by the way. Those are just what I'm calling it for ease. I call strategy 1 the angel disco, and this is the disco box. And I call strategy 2 the flying angel. Strategy 2 is when the market moves in the opposite direction to my bias. So I don't trade that. I just wait for a different setup to happen, to form. So I know beforehand which one I'm looking for, what direction I'm looking for, and exactly where my entry and exit is going to be. The exits are pre-decided, so I obviously know what my stop loss is. I have a standard stop loss for each market based on how volatile it is. And then I have a standard take profit as well. Sometimes I might adjust them if there's a particular something going on, which makes me think it's going to be more or less, but on the whole, I keep it as a standard. Can you share any tips for maintaining a trading journal? Good question. I think trading journaling, I think journaling your trades. I think journaling your trades is really important for your progression. I've noticed that when traders really go deep into their journaling, it's usually when they have a bit of a breakthrough. When you're taking your journaling seriously, it's usually when you're in the mindset of you're really ready to progress. I've used lots of different journaling tools over the years. And to be honest with you, I think that the one that I haven't tried yet is going to be the one that I'm going to like the most. So I'm not going to go into it, but there is one that's really popular. I've looked into it, I just haven't used it yet. And ultimately what it is, it's back testing software. I've used back testing software before where you can journal, and I think that's really useful. I think it's really useful to get a screenshot of your trade to see exactly how it looked, and then to be able to write next to it what your thoughts were before, during, and after. You can also write how that relates to the different news releases that were out. And I think the New York session and the New York news releases are quite an interesting one, because you do get the same ones coming up month after month, and just having a clear idea as to when you should or shouldn't be getting into the trades based on that, or how you use that information to plan your trades differently, is really helpful. So I think that, yeah, I think I'm a big fan of journaling. To be honest with you, I've recently just started writing in the note section on my phone. So I will just write out what the date is and what the news release was and what my thoughts were, how I traded, what I would have done differently. So it doesn't really matter what you do, but I would say my biggest tip was to get some good backtesting software if possible, and to take a picture of the trade and then write your thoughts before, during, and after. How do you handle emotional stress whilst trading? I have a saying which I say to myself. I've got loads of sayings which I say to myself, but one of the sayings that I say to myself to help me manage emotional stress is that no trade will make or break you. What that means is that my risk is so small on each trade that no trade should be exciting or stressful. So, for example, on that NASDAQ trade you saw, I was risking 0.1% and I would have made 0.4%. None of that is scary or exciting or a big enough deal. No trade with that risk to reward ratio on that lot size is going to make or break me. So one bad trade isn't going to ruin my account. It's not going to set me back too much. And no good trade is going to be so exciting that it's going to throw me off. And that's quite useful because what it's reminding you is to be consistent over time, to do the same thing day after day, and to let your strategy play out over the long term. But on a day to day basis, on a trade to trade basis, no trade should make or break you. Therefore, there's no need to get stressed or excited about any trade. What are some common misconceptions about trading? That all traders are millionaires, or that all traders are trading to become millionaires. What I've learned over the years, I've coached quite a lot of traders over the years, and what I've learned, which is kind of interesting, I think most traders do, first of all, come into trading because of the money side of it. They want to be able to make more money, or they want a more flexible way to make money, or they just want to learn another skill that they can make money from home. So a lot of it is to do with money to start with. But a lot of the time, years later, there's a lot of broken traders who are coming to me and they realize it's not going to be quick and easy, but they love trading and they're invested and they want to learn the skill and they want to develop the skill, and they don't care necessarily that they're not going to be millionaires straight away. They just really love doing it. They really love that it's difficult, actually. I think a lot of traders do love that it's difficult and they enjoy making progress in something that is difficult, even if it's just gradual. So I know that's not everyone. Obviously, there are some people who want to make really, really quick profits and think that it's a get rich quick scheme. But actually, I think more traders than you would imagine know that it's not a get rich quick scheme. And actually, they just really love trading and they just really want to trade well. How much time do you typically spend analyzing the market? So I start trading at 2:30 or 2:31. So New York opens at 2:30, but I'm not allowed to trade until 2:31. So I always wait for that first minute candle to close. I start working at 2 o'clock. So that gives me half an hour to analyze the market. So that's me putting all my points of interest on the NASDAQ and the US 30, putting on the disco box, my zone of interest, and going through the economical calendar, seeing what's come out already, but also seeing what's due out later. So that helps me to plan my trading day, because some days nothing is coming out that day, but some days it will come out at 2:45 and 3 o'clock. And therefore, you've just got to be aware that there's two pieces of news coming out at two different points, and that's going to affect how you might want to enter or exit trades. So half an hour, basically, it takes me half an hour to analyze the market and fill in my pre-session checklist before the market opens. What markets or assets do you focus on and why? So I think I've already said this one, and that is US 30, Dow Jones, and the US 100 or the NASDAQ, both American indices. They go quite nicely hand in hand because they're both American indices. So I'm only really looking at the American economy, and I'm only really looking at the New York Open, New York Close. So they're quite nice because it gives me those two options. There's a lot of crossover, but also they sometimes move differently. For me, they work really well because I like the fact that they do move quite quickly, so I get that instant feedback. They do have quite dramatic moves during the New York session, sometimes even in the London session, but I don't trade them then. What I quite like about the indices rather than Forex is that the indices is just looking at one economy, whereas Forex, you're always comparing one economy to another. Therefore, you need to be experts in two different markets. Say if you're trading cable, which is pound dollar, you need to be an expert in the UK economy and the US economy. and you have to be aware of both opening and closing times and all the different news releases which are coming out, and it's a matter of weighing one up against the other, whereas these are a little bit more straightforward in my opinion, because you're just looking at one economy, one open, one close, and also it's quite clear what makes them up. So for example, the US 30 is made up of the 30 top companies in the US. So when you understand what those are, you know when to look for them on the earnings reports. It's a lot clearer what is moving them and why they're moving. And how do you keep up to date with market news and trends? So I check the economical calendar. I use my FX book. This is just one that I've always used. I find it quite straightforward to use. It's nice and easy for me to use. This is how I check what's coming up. I always have high impact. I'll show you what I do. I always have high impact and no impact. I don't bother about these two, otherwise it gets quite noisy. But I like to have high, obviously, because it has a high impact. And I like to have no impact because that also tells me about the holidays when the markets are closed. So that one's quite useful for that. And I also keep up to date with the earnings reports. So this is on TradingView and it tells me when the earnings reports are out, which is obviously really useful because they make a big impact. Here it tells you if it's after close or before open. I also follow loads of other news channels. So I have all of the pop-ups coming up on my phone and it really annoys everyone, or annoys all of my friends and the people around me because I'm always announcing the news when it pops up. So that's probably the journalist in me. Every time I see a news release, I'll always tell everyone what's come up. And most of the time they don't want to know because usually the news is quite depressing and most people deliberately choose not to follow the news. But yeah, I'm always keeping pop-ups on my phone from all of the different news channels. I like to follow Bloomberg as well. I follow loads of them on Instagram as well. So like Yahoo Finance, Bloomberg, all of those sorts of things. And that's kind of how I keep up to date with everything. So I hope you found this video useful. If you did, make sure you give it a little thumbs up. It's good for the YouTube algorithm. It means I can continue to create this free content for you. And if you'd like to stay up to date with my trading journey, then make sure you hit subscribe for more.